Vineet Nair, Vice Chairman and CEO of HCL Tech, joins us right now on the show from New Delhi to speak about that. Vineet, good having you. Thanks much for taking the time out. This is Neeraj here. What's the sense that you have got from your clients about the 2013 IT budgets? Because this quarter was supposed to be big. Could it be around the 2.5% IDC Gartner thing that you're predicting?
On the overall sentiments in the IT industry, I don't think anything has changed. The overall increase in budgets will not drive growth. The market churn will. And the market churn continues to be quite strong. Some vendors are losing because they are not creating the value they promised to the customers. And some vendors like HCL are winning because of the uniqueness in proposition and constant innovation. So overall, whether it is a 2.5% growth or a 5% growth or 1% growth, I don't think that is determining overall growth of the market share or the market growth of various vendors.
Vineet, some experts say that infrastructure is likely to see highest growth in 2013. That must be music to your ears. I mean, what's your sense? Can past, future, or rather past fast growth continue? And how about discretionary spend? Are there any signs of a pickup that you're witnessing?
I think when you look at run the business, which is where infrastructure really belongs, the reason you are seeing a significant growth is most of the contracts, which is about $45 to $50 billion coming up for renewal, 30% of them are changing hands, and that is the key growth driver both in application run and infrastructure outsourcing. And I think that trend will continue till 2014. On the discretionary budget, that continues to be A, muted, B, decision which is taken on a near-term basis. So therefore, there are no long-term budgets being created, and therefore there's no visibility on what would happen. However, having said that, more and more companies are realizing that it's only through discretionary spend would they be able to increase their revenue. That is by digitalization of their organization is the only way they can reach more consumers and reach more products per consumer. And therefore, I do believe that discretionary spend budgets will come back because that is only one of the alternatives, if not the only alternative available to increase revenues.
What about deal pipeline, Vineet? I mean, the last time we spoke to you, you were hopeful of close to 35 to 40 billion worth of deals up for grabs in the December quarter. How is that shaping up for you? Are you still confident of that the macro uncertainty has not taken a toll on that?
I think the deal pipeline continues to be good. You must understand that because the deals are moving in because of the churn in the market, therefore there is a predictability and there is a deadline by which those deals move. And therefore when TPI data shows that $45 to $50 billion of deals are going to get decided, they do get decided on that day. So therefore there is a predictability of this market, and this quarter continues to be good as I had predicted from the decision on deal pipelines. Now the only variable is how much do we win, and that you would have to wait for the quarterly result announcement.
Right. Vineet, that's revenue growth visibility, but what about margins? Can you maintain them at the current levels, or FY13 will be about improving them?
I think from a margin point of view, it is important for any business leader to think about what is important at that point of reference. Because once you get into the customer, you can always expand your margins, which is exactly what we did. We used the 2010 and 11 period to get into the customer, and you're using the calendar 12 period to expand our margins. How would future look like? We do not give guidance for the future, and therefore you'll have to wait and watch our results.
And the other moving part in earnings is the rupee. How are you coping with it? Because it's been extremely volatile the last, at least 30 days, if not more. Any rethink on the hedging strategy that you guys have at HCL Tech?
There is no change in our hedging strategy. I think the rupee has been moving up and down quite a bit. And therefore our hedging strategy of hedging monthly, hedging 40% of our incoming, and hedging 1 year, 2 year, 3 year, that continues. And I think consistency in hedging policy gives predictability of earnings and hedges us from volatility of the rupee, and that our view will continue to be that.
Right. You've led growth in the industry, Vineet, for some time now. Are you confident of outpacing your peers in the next couple of years as well?
I think competition has only excited us, has never scared us. The more the competition, the better HCL performs. And I hope we see more competition, more innovative competition from all across the world, which challenges our emerging dominance in total IT outsourcing.